Hey folks, welcome back to Analysis Finance. Today we'll just discuss about what kind of investor or trader are you. I'll just directly get to the point. Okay, so you might be knowing there are investors and traders. Okay, so investors are people who will be investing for more than a time period of 6 months, anywhere from more than 6 months to anything 10 years, 20 years. So they can be called as investors. And the people who are uh, people who are putting money in the market and they are selling those things within a time span of 3 to 4 months or anything less than 6 months, they can be called as traders. Okay, so there are many sub classifications in the traders and in the investor side. Okay, so in investors, almost 6 months to 1 or 2 years can be called as short-term investors. People who are putting money in market with a time span of almost 6 months to 1 or 2 years, they are short-term investors. And any people who are putting money for more than 2 years, they can be called as long-term investors. So if someone have invested a certain amount of money in Reliance 10 years back and right now it's 10x, so then he had a long-term capital gain because it's a 10-year duration, and the entire tax range for long-term gain and short-term capital gain is entirely different. That's a story for entirely another day. But still, I think you got the point of what a short-term and long-term investors are. Then uh, let me come to the traders. There are two kinds of traders: delivery and intraday traders. Delivery traders matlab people who are buying a stock and they are keeping the stock with them for almost for more than a day. They can be called as delivery traders. Okay, and the people who are buying on the exact same day and selling on the same day is known as intraday traders. So what happens with these futures and options, crypto? What crypto traders, futures and option traders, what they mean by is that they buy futures or options or whatever they are buying and they sell those in the same day itself and they book the profit. That's why they are being called traders. There is also another one category called swing traders, which means they will be buying a stock one day and after probably 1 week or 1 month or even 2 months, they'll be selling that stock by getting either their profit or loss. So they can be called as swing traders. So I'm trying to reduce the confusion as maximum as possible over here. So I think you understood till the point which I have reached. Okay, so there are investors, there are traders, then there are these different kinds of traders over here. Okay, so what normally a salaried employee would do is they can be considered as a retail investor. Okay, because we are only putting small amount of money. For example, a salaried employee will be putting like 10,000, 20,000 rupees of their monthly salary into the markets. So they can be called as a retail investor. Okay, they because they want to grow their money, they are putting money for a long term perspective. So they are called as retail investors. And since I am in India, I am putting my money into the Indian markets. Okay, so I can be called as a retail investor investing in domestic markets. Did you get the point? So the mutual fund companies, the different banks, they will be putting a certain amount of money of their bank into the stock market. Okay, and when mutual funds invest that amount of money into the market, they are called as domestic investors. You might have heard this term DIII and FII, domestic and foreign investors. So right now we are talking about domestic investors. Domestic investors like mutual fund companies and different other entities, they put their money into the market, into the market which on the same country. Okay, that's called domestic investors. So me as a retail investor comes under the category of domestic investor. Okay, so basically I am a retail investor who does swing trading. I buy a stock on Monday and if the stock goes up on Friday, then I'll sell it on Friday. Okay, let it be profit or loss, whatever it is. Okay, so normally that's what everyone does commonly as a salaried employee. Then comes the other part of traders. Traders are entirely another people who does trading as a career, and that's their main source of income. They will be known as, there are different categories for that. People who focus on special markets, there are many different markets inside the traders. Futures and options are one thing. Second thing will be commodity market. Even the salaried people who are doing a 9 to 5 job, they can come back to home, and after 5 o'clock, 6 o'clock, because the commodity market will be open till 11 p.m. Okay, so they can trade in the commodity market. Inside commodity market, what trading does it happen? The trading of commodities like gold, silver, copper, then crude oil, such kinds of things happen inside the commodity market. Trading of those components. Okay, so that's one is futures and options. That is pure equity based. Second one is commodity market. Then comes the crypto market. Crypto market is 24/7 open. So even if people are salaried or non-salaried or business or whatever it is, they can anytime do the trades in crypto market because it's open 24/7. That's crypto. And then yeah, so basically those are the traders that's there in market. Then comes the subcategory of investors. As I said, there are domestic investors, there are also foreign investors, people who are putting money into other countries which they not belong. Okay, so if I am investing in US markets, then I can be called as a foreign investor in the US market perspective. Okay, that's why in recent market crash, recently Nifty crashed a bit. So the reason of that crash was the foreign investors was taking a lot of money from our market. They were selling a lot of things from our market, so they were taking the money back. That was one of the major reasons for the markets to fall. Okay, so yeah, there goes the foreign investors. We talked about domestic investors, and then comes the corporate side of the investment. There are VC, venture capitalist, where people put money more than 10 crores, 12 crores, more than that into certain specific companies to invest in that particular company. Okay, because they are buying a certain piece of share of that particular company, that are venture capitalist. That's like an entirely another firm which does the venture capitalist. Then there is another thing called angel investors. Angel investors are people who spend more than 25 lakhs. Then only can be considered as angel investor. The people who puts more than 25 lakhs into certain companies and buy equity of that company, and also works along with them to make the company bigger. Okay, so VC and angel investors are majorly focusing on startups which have a growth potential. So that's the thing done by angel investors and VCs. So I hope I cleared a large part of confusion regarding investors and traders. Okay, investors are people who can be called who puts money in the market for a long term perspective. Traders are always focusing on short term money making. So that's the entire difference between traders and investors. You might be knowing about these differences, but there are many sub classifications. That's why I made a video to clarify if you had any doubts. So I hope I didn't miss any of the points which I was supposed to say. Yeah, so basically that was it. Thank you so much for watching.